The oil price has been increasing. It has increased by 25% since the beginning of the Middle East conflict. And the petrol prices are also increasing in cities from Manila to Munich. And against this background, China looks like the obvious loser because China is the largest importer of crude oil in the world. But the real story is very different and very interesting. Let's go after it. First, indeed, China is the biggest importer of crude oil. China imports around 72% of crude oil for its consumption. And China is the second largest consumer of crude oil, following closely the USA. And also, around 20% of world's crude oil goes through the Strait of Hormuz. And anything happening to the transportation line will directly impact the crude oil price and crude oil supply. However, there are three highly important details that we have to understand. The first is that China has been preparing for this for decades. China has put together a huge amount of reserves. Nobody knows the exact amount because this is held as national secrets. However, most analysts outside China agree that China most likely has between 100 to 130 days of reserves for crude oil. And also, total energy consumption is now moving away from crude oil. About 30% of final consumption of energy comes from electricity. And electricity is mostly supplied in China by coal and solar panels and windmills, not by natural gas or crude oil, okay? And 80% of China's crude oil consumption is in transportation, okay, in the forms of diesel and petrol. And now, last year, 50% of new cars sold in China are now electrical vehicles. They can rely on electricity. As for diesel, China has mature plans and mature technologies to replace diesel by methanol, by combining coal with green hydrogen. Hydrogen is obtained by electrolyzing water by using green power from solar panels, from windmill to generate hydrogen. Now, hydrogen will be combined with coal to produce methanol. Methanol can be directly put into the engine of trucks, and the cylinder and the pistons be readily modified to use methanol. Actually, diesel engines can directly use methanol. The only issue is the longevity of the pistons and the cylinder. Okay, China has technology to coating the pistons and the cylinders to sustain the corrosion from methanol. So the methanol technology is in the back burner, is ready to be applied to the whole country readily. Within 1 year, a majority diesel engines can be replaced by methanol burning engines. The second detail is that China actually stands by benefiting from the crude oil crisis because China has been a leading country pushing for alternative technologies to replace crude oil. The list is very long, including solar panels to generate electricity, windmills, and methanol. And methanol is actually a technology which is not widely publicized. However, in China, I've been pushing for this technology for years. The methanol can be easily produced. The only bottleneck is diesel engines converting to methanol burning engines. And that technology is already obtained by Chinese companies and readily applied to diesel engines. So with any oil crisis, there will be a surge of Chinese products in solar panels, windmills, and EVs, so on and so forth. The demand for Chinese goods and demand for Chinese technology actually will go up. The third very subtle detail is that China is the only country allowed by the authority of Iran to use the Strait of Hormuz to transport crude oil. So China stands to benefit Now, you may argue that the US will come in using its military force to stop this usage of the Strait of Hormuz. But if you actually think about it, US may not do it because in the end of the day, when Chinese vessels are shipping crude oil through the Strait of Hormuz, the world's crude oil price will be stabilized. So in the end, the US president will be happy to see this. So the US may not want to engage in military action against Chinese vessels, against Iran authority, to allow Chinese vessels to continue transporting crude oil in the Strait of Hormuz. Now here is a big picture question. That is whether the world economy will get into stagflation, that is high inflation pushed by crude oil prices and a slowing down of the economic growth, just like early days of 1970s. And will China be a big loser of the stagflation of the world economy? Now, my view is that the Chinese economy will be able to navigate around the stagflation issue that is possible for the whole world economy. Why? Because number one, the Chinese inflation level is very low. In fact, for the past 2 years, Chinese inflation has been negative. So an increase in inflation would not be as damaging for the Chinese economy as for other economies. And to go with this, Chinese supply of production is now very strong, okay? And lastly, and the most important, is that the Chinese economy actually has a lot of tools have not been tapped to boost domestic consumption. Any signal of stagflation in the world economy will push the policymakers in China to start using these tools. For example, let me mention two of them. Number one, the Chinese central government should and will, if there's a stagflation, massively increase central government debt. Okay, because the central government debt is very low, but it's only 30% of GDP and against around 100% of GDP in the hands of central government in holding valuable, commercially profitable assets. Okay, with higher central government debt, give this to local governments. Local governments can spend this on social welfare. And another instrument is for the central government through local governments to buy back a lot of inventories of property, unsold apartments, as a way to stabilize the property market. When the property market prices stabilizes, okay, households become much more comfortable in consumption because 80 to 90% of their assets are in the property market. So anyway, so there are lots of instruments for the Chinese policymakers to use, and they are now very cautious. Any sign of stagflation will push them to be more aggressive, to be more audacious, just like in the days of 2009, that is the aftermath of the global financial crisis.